Woo, boy! Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And have you seen Target stock today? Woo! Man, Karen is pissed. The Karens around the United States who think they're better than you because they shop at Target. Yes, Walmart's for the poor people. Even though I love poor people, I vote Democrat. I don't shop at Walmart because it's full of poor scullions and minions. Whoa, man. Target got freaking wrecked, just like Walmart did. Now, we all know why these retailers are getting annihilated. Number one, they're massively over freaking valued. Okay. A lot of retailers are very low margin businesses. And during the pandemic, what happened? Stimmy checks, printing tendies, everybody shopping and spending galore. And all the retailers posted record revenue growth and record profit margins. What a shock when you print a bunch of freaking money and give people child tax credits and stimmy checks and they go spend it at retailers like Target and Walmart. Of course, their freaking revenue and freaking profits are going to increase. Wow. But now we got inflation migration going on. Okay. And what inflation is doing is it's increasing the costs, the input costs, the inventory that these companies are selling. You got gas prices going up. Everything's getting more freaking expensive. So these low margin businesses are very susceptible to inflation because if prices don't go up as fast as costs do, guess what? You could potentially become unprofitable. So let's go look at the chart of Target. I'm going to give you some technical analysis, okay? Watch this technical analysis. Down 24%. Look at that. Flat, 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 flat. Nuclear launch detected. Holy crap. So in one day, it's down 24%. Now, let me make sure my thing's sharing. Now, a lot of you clowns, a lot of you doofuses think, oh my God, Target went down and you always buy the dip because the stock goes right back up. No, I entirely disagree. Let's go look at the 5-year chart of Target my Schlarget. So, okay, we see some growth. You know, the stock price starts to increase. And then the pandemic happens. So this March 27 was basically the bottom of Target's price during the pandemic. Oh, come on. Why does this happen right now? And of course, it goes from $92.57 and it explodes all the way to $261. That's freaking nuts. Why? Because they had record revenue and profits. And I was sitting there because I'm such a genius, guys. And I said, stimmy checks, child tax credits, unemployment, people have more money. They're going to go spend it at Target and Walmart. And that's going to increase revenues. Wow. But is that going to last freaking forever? No. Stimmy checks are gone. Child tax credit went back to the normal one. Where's the money going to come from, ladies and gentlemen? And now we got gas prices skyrocketing. Holy crap. Have you seen gas now? Whoa. Even here in Virginia. Oh, Virginia. Oh, yes. Even here in Virginia, gas prices are like $4.40 a gallon. It's like, Jesus Christ. I'm buying a Tesla for my next car. Just kidding. So Target got freaking wrecked. So let's see why. And I love the title of this article by Paul R. LaMonica. Target posts a stunning drop in profit. Wow. Inflation is skyrocketing and stimmy checks are gone. How stunning. Woo, look at the markets down today. Another buy the dip opportunity for VT, perhaps. Target's earnings didn't hit the mark. They posted a stunning 52% drop in profit. You better start raising prices, Target, my Schlarget. Missing Wall Street expectations. Because Wall Street they're such geniuses that they don't factor in decline in stimmy checks and tax credits and rising input costs for inflation. So Target's down 25%. Freaking wrecked. And the same thing happened to Walmart. All these retailers are getting wrecked. Now, let's go look at the financials of Walmart. And I'll show you exactly why. This was just a massive freaking clown bubble. So we look at this is quarterly. We look at quarterly revenue growth. So going from left to right, you can see revenue was growing at, 3, 4, 5% every single quarter. And then all of a sudden, there's this massive spike in revenue around the beginning of 2020. What could have caused that, ladies and gentlemen? I don't know. So you see this massive explosion. When you see something like this, if you look at a company's quarterly revenue growth year over year, and you see this massive freaking explosion, something's fishy. Okay, unless they acquired a bunch of businesses and put on a bunch of debt or issued a bunch of shares, something's very freaking fishy here. When I say that, immediately scares me. I don't touch a stock when I see the stuff like that happen. That's a disaster waiting to happen, and it happens to every company, including La Tesla. Oh yeah, La Tesla. So we have year over year revenue growth: 13, 16, 18, 22, 19, 14. Okay, so it looks like all of the pandemic. Now, if you look at annual revenue growth, look at this: 2021, 13%; 2020, 20%; 2019. 3.6%. 2018, 3. 2017, 3. So if you were to guess what revenue growth number I would put in my model, am I going to put in that Target's going to grow revenues at 19% or 13% going forward into the future? Or am I going to use something more conservative like 3 or 4%? And as a matter of fact, since there was such a massive jump in revenue, perhaps I would maybe consider revenues are going to be flat going into the future. Because when you have a massive up ramp like that, you kind of eventually revert to the mean. You revert to your long-term growth rate. So it's entirely possible Target's revenues could be negative over the next year or two. I would not be shocked in the slightest. So massive overvaluation, still overvalued. Massive spike in revenue that's temporary. Wall Street being stupid. This stock scares the crap out of me. Let's go down and look at profit margins. Profit margin. 6.5%. Okay, that's stimmy check time. 4%. 4, 4, 4, 4, 4.5. How hard is it going to be to predict what the possible profit margins could be? And with rising input costs, profit margin for the next year or two could be 2%, 2.5%, maybe. But the long-term trend is 4%. So if you wanted to model this out, you could be conservative, really conservative, and say, okay, I think the next 2 years, profit margin is going to be 2%. And then eventually it'll revert back to 4%. But that's too much work for me. So we're just going to use 3 or 4% in my model. Free cash flow margin, 3, 6, 5, 6. Okay, so roughly we can call it 4.5, 5%. Let's go look at cash flow. Operating cash flow. 5.9 billion, 5.4, 6.9, 5.9, 7, 10, 8. Looks like Target had a massive explosion during stimmy check times. What a shock. Free cash flow. 4, 4, 4.5, 2.5, 4, 7.9, 5.1. Okay. What are they doing with shares? What are they doing with shares? Are they buying back the shares? Let's see. I think they are buying back shares. They are buying back shares at a pretty significant clip. Where is it? So actually, they have it on the ratios right here. Share buyback yield. Where is it? I'm freaking blind. Where are you? Hello? Hello? Here it is. Buyback yield. So it looks like they're roughly buying back 2.5% of their shares every year, which is pretty nice. Okay. Free cash flow yield, 6, 4. Great. So let's go ahead and plug this into the model. And I'm going to show you what price I would potentially buy Target at. So we pull up my trusty dusty model. I've already entered the trailing 12-month revenue. It's $112 billion. Current shares outstanding. The last data I could find, they had 493 million shares outstanding. To be nice, I'm going to use a 10% discount rate. That's the historical average of the market. If I was to consider buying this stock, I would use a 15% rate, but we'll look at that in a second. We'll use 10% to be nice. Revenue growth. I think revenue is going to be 3% or less going into the future. You can even be conservative and say 1.5 because you can't have that massive ramp up and then just continue to grow at the historical average rate. It's probably going to, revert down a little bit. It could even be negative. Profit margin. If we go back and look at the profit margin, They're roughly pulling in at the bottom of the income statement 4% historical average. I would not use this 6.2, 6.55. So 4%. And if we're worried about inflation, we could use 3%. Free cash flow margin, 65635. We'll use 5%. And price to free cash flow. Let's look at the historical PE ratio. So we could see before stimmy check pandemic printing tendies PE ratio, it had a 13 PE, 13, 13, 12, 17, 20, 15. Honestly, 5 years from now, which this model takes into effect that you're going to sell this stock in 5 years and the multiple of earnings is going to be 10, which is reasonable to me because in 5 years, Target ain't going to be growing that freaking quickly, at least in my opinion. So 10 or even 8 could be reasonable. We'll use 10. And then price to free cash flow. Let's see. 9, not 8, 9, 9, 14. I would use 10 as well. And 2.5% share buybacks. So if you're looking at Target for a 10% return, you would potentially consider buying it if this model's assumptions are accurate. I could be totally freaking wrong here. At $81.30. What's the stock trading at now? 161. This stock is still massively, massively overvalued. I don't know what assumptions Wall Street is using for this stock. Are they saying the PE is going to be 20? Are they saying the revenue is going to grow at 10, 6, let's say 8%? 8%? Do they think the profit margin is going to be 5? Like, what are they putting into their freaking models here? This is nuts. No, I think revenue is going to be, I would go 1.5 to be safe. Profit margin 2.5. Free cash flow margin 5. PE 10, 10. So even then, I mean, holy crap. That if the profit margin stays low because of inflation, I mean, you're looking at a buy point of 67. Like, I don't understand. I don't understand the whole fascination with Target. So you freaking Karens who, Target is so much better than Walmart. I think Walmart would be a better buy. So personally, I would consider buying Target at $89, roughly. This is like my initial assumption. And that's probably being too aggressive because their profit margins might be lower. Look at the difference. Look what 1% profit margin does. 3%, 67. 4%, 89. So if Target underperforms, you could still lose money. So this stock is a freaking joke, man. I hate Target. And Target's not even that good. Like, what's so good about freaking Target? Really? They don't have as many food options. Their crap's more expensive. It's slightly cleaner than Walmart, but I've seen some nice Walmarts. You can get way more stuff at Walmart for better prices. Why would you go to Target? So you can be liberal and amazing because they have diversity ads on their website. Like why? I don't get it. Whatever. All right, let's see. Thanks, Mark. I think Target will come down to 135. Man, if they keep missing earnings and their profit margin stays low, that stock could go a lot slower. That run up during the pandemic was freaking ridiculous. Absolutely ridiculous. I saw that and I was like, hell freaking no. Gross margin is 30%. That's not bad. I mean, okay. But even then, it's all about what hits the bottom line. You have other expenses after gross profit. I'm not saying Target's going to go out of business, but I think their stock's massively overvalued. Tesla. Tesla. Every year for the last 10 years. Tesla. All right. Somebody said, so if you want a 15% rate of return, you need to wait a long time. I'll probably never buy Target. And if Target gets freaking wrecked to the point where it is a buy, I bet you Walmart will probably be a buy at that point too. And I would rather buy Walmart stock than Target stock because I'm a Walmart fanboy. You know what I'm saying? You guys like Tesla and all these futuristic companies. I love me Walmart. Woo! I shop at Target, Costco, and Target. You mean Walmart? Target and Costco are much better of an experience. Walmart sucks, but has the best prices. And I've seen really nice Walmarts. Like, I mean, some of them are crap. You don't want to go there. They're dangerous and stuff. But I've seen some nice freaking Walmarts, man. Like the floors are like sparkly and everything's pretty. And you can get anything there. Target, they don't have half the crap that Walmart does. I don't freaking get it. Why would you go and spend more money especially during inflationary times, and have access to less stuff when you can go to a Walmart and okay, maybe there's somebody screeching in the back of the store, or maybe there's like a fist fight in the freaking, panty aisle. But I mean, come on, guys. You guys need to consider the effects of inflation on Target and versus Walmart. I think Walmart would do better during inflationary times. Remember when Tesla caught up to Walmart? They caught up with market cap. But comparing Walmart to Tesla, Walmart, which, is everywhere, and Tesla, which is a niche luxury car company, it's a joke that Tesla's market cap is higher than Walmart's. That's just ridiculous to me. I saw your little video user. You can go watch his video, everybody. He made fun of me because I said Tesla was overvalued. And it is. I don't delete my old videos. I stand by my words. I'm on a bussy. Most Walmarts are hood, not worth getting robbed. Honestly, I haven't had that experience. I mean, some Walmarts are bad, but there's also some nice freaking Walmarts. I'm just saying, okay? Only nice Walmarts are rich areas, even then it's a gamble. Yeah, whatever. I'm a Walmart fanboy. And you can also do Walmart delivery, Walmart Plus. I have that. It's $98 a year. You get discounts on fuel. You have free unlimited delivery. You got to tip the driver unless you're a dick. And it's great. I love it. Go on the app. It's a good app. No problem whatsoever. So that's that. Target is massively overvalued. It's a joke. I'm not buying the dip. And if Target ever got to a buy area, I would buy Walmart instead. All right. Talk to you later. Cheers.